Thank you for coming on into the live and sharing your essence with me in this eternal moment of which we all share an inextricable and inexorable part. Thank you for doing your part, for coming on in each and every day, and let's not waste a single second of your time as we go into the charts. Bada bing, bada boom. With Bitcoin to the downside, it dropped out of that 382 of the pitch fan, which it bounced off of 5 days running, and it went down with a fury to the downside with the CPI data by nearly 5% out of there. And let's see what we are coming down into in terms of the liquidity. We have some support structures here on daily time frames, these wicks that we could be coming into this support zone. It also is the bearish trend base fib extension level of the past the 1382, leading to the Hail Mary play of the 1618 of 24478. Are we going down further is the question on everyone's mind. Let's go into high block capital. What is high block capital? Well, it's when people lock their liquidity in the charts to get burned to a crisp, and for not using a stop loss, and we get to see where those crispy characters lie in wait. So let's go see where they lie today. So we still have the pools up above that are getting paid right now. If they don't consider closing their trade to pay themselves, they could come back and retrace as they did into this small 100x guy that opened up into this drop down wick here, and they grabbed $92 million there without hesitation.
Fatality.
Not to mention the $232 million that they came down to here, with also the higher time frame, which we will go into. As it stands here on the 1 minute time frame, we are $10 billion imbalance to short liquidity that we could come back to. They do like to come back to the 100x level, so I would suspect we come back into some of these fair value gaps on this 1 minute time frame, particularly the 200 million up here at 100x that has the partner in crime of another 92 million pinged up here. Also, you have a $241 million 100x pool at 25,301 that we have yet to reclaim. So that is interesting to note. So let's go to the higher time frame to see which pools we did knock out. I already had this loaded, so let's just go to the 7-day and start our ascent through as we expand our vision to the higher time frame external liquidity pools. So as it stands on the 7-day, we did come down into this about $30 billion of long liquidity. Now, as it stands now, you have an imbalance up to 27k of short liquidity that does exist in that region if we are going solely off of the 7-day time frame. If we expand our vision to the monthly time frame, we did mention about the 30 billion that was down here that we did start to come back into. We are not yet into the regions of the double digit pools down at 24.2, and those also coincide quite nicely with the higher time frame, so it could be that we do continue lower into the 24k region. There is a single band of double digits up at 28.1, but as it stands right now, we are potentially gaining interest in these pools down at 24.2 and below. Let's go look at the 3-month and see which pools we took out with that drop. Okay, so we previously saw that we came down into this region and took out $180 billion of longs from 25.6, 25.4, and 25.2. So those guys were off the table, and we started to spawn some divergence, which did come back into some of these pools, but not much was on the table for longs, and they just likely stopped out a bunch of 100x, and then they came down with a fervor into these pools, and another $100 billion was knocked off the table at 25k and 24.8 by the looks of it. So you have over $400 billion knocked off the table here down to 24.8. We still have 150 billion down here down to 24.2. Starts to taper at 24 even, and we get 36 billion down there, but this is just solely the 3-month time frame. If we expand our vision further to the 6-month, we'll see that those numbers are quite richer, and we have another 200 billion down there to 24.3 and 60 billion at 24 even. So are we out of the neck of the woods just yet? I would say not until some of these yellow bands dissipate. Perhaps we could come lower to 24.3. In the interim, though, I do suspect that we will retrace into some of these pools to grab some of the 100xers, and we chill out here. So I would expect a bounce of some nature at one of these levels here. Let's go into the 2-year time frame, because that's the only one that lets us see all of the pools in their glory. So if we see all of the pools in their glory now, you do see that we were hitting this region and taking out that 25 to $142 billion gone on the 2-year time frame. You do have another 154 billion down to 24.4, and for whatever reason it's tapered or not gathered correctly at 24k. The highest pool located above at 32.4, but in the meantime you don't really have so much to warrant that interest just yet. we are waiting to see if divergence will form on the lower time frames. With that in mind, let's go into the charts and take a look at where we are at. Currently at 24,893 on the Coinbase chart. Let's go to the Binance chart to check out our momentum. We did talk about this potential coming down to the 23,934 region for that divergence play in this Hail Mary region of this impulse retrace bearish trend based fib level that we had for you since May 6th. So are we going to come down to this and spawn some divergence at sub 24k? The liquidity does suggest that could. We did see this mini bearish trend based fib level basically fulfill itself by going all the way to the 2 level. How did we get that for you? Well, based on Wednesday, June 7th, we did have this impulse to the downside in the retrace here, and we said if you cannot hold or get above the 236, then you would basically be seeing more downside. And on our oscillators, we did see those time frames overbought. If we came back to here, I believe we were live at the time. Basically, you saw that these 6 time frames were overbought and we weren't making it above this 236, so that was your entry model for the 236 entry on the bearish trend-based fib. And boom, we dropped out with fury, and now we fell a second leg down there. So what are these oscillators? We are jumping the gun here, so we will go back into the weekly time frame and basically turn on our oscillators and go to the link in the description, momentummaster.info. Scroll down to features for more and take a look at the heads-up display for all of the toggleable features and read about each one in its glory. So what is this? This is Momentum Master. Interesting suite that can preempt certain things like this cross down event on May 1st of the weekly time frame, and how we've been suppressed ever since to the downside for 1, 2, 3 with 1 week, 4, 5, 6 weeks of downside with 1 week of retrace, ABC to the downside. All right, so we talked about how the 5-day and the 3-day were closing with yesterday's daily candle close, and that did close bearish. And let's go see what the oscillators have in store for us. We can remove some of this stuff, so we're going to remove this and remove that and remove that real quick, and then just take a look at the cloud. So we're at the outskirts of the 5-day cloud of the Heikin Ashi formula. If you come down into this golden pocket on the 5-day, the super trend is coinciding with the 0.66 of this fib retracement level. If we come into our oscillators here, we have gotten oversold on the stochastic RSI. The Williams still could come down a little bit further. If we go into the 3-day, however, that has already negated itself in terms of oversold on the Williams as well, getting that double bottom green zone, and money flow is beneath the RSI, suggesting you come back up to it at some point. When is the divergence going to form on the lower time frames? Let's take a look a little bit deeper tonight. So if we go into the daily time frame, we do see that the daily time frame could come down some more, and we are getting the Williams oversold in a nice manner at long last. The suppression event of the cross down event back here on June 9th, Friday, has been remaining, and we have not yet gotten above. We had this attempt to maintain above the weighted moving average on the daily time frame with this buyback up to 26,456, and then getting rejected ever since past the weighted moving average and below. Okay, let's see, is there anything to glean off of the oscillators? Not really seeing any divergence. Oh, well, there is some bullish divergence starting to form on the daily time frame money flow. You're seeing a lower low, and yet the money flow is flowing back in ever so slightly on the daily time frame. So are we starting to see some divergence forming? It has not yet locked in until we see a candle close on the daily time frame, but this could be inbound for that. 22-hour does not have bullish divergence. It previously did, which attempted to play out and got that rejection up at 26,456. So we had that previous bullish divergence on the money flow and the RSI, and we saw a gain of essentially 3%, just abouts from there. And now we are going into the 22-hour is also getting into that zone with the Williams, so you could see a 22-hour bounce without question as we get all our oscillators in the sweet spot. Earlier today in the Discord, we did have for you the idea of the 7 time frames oversold, which is a dynamic alert system that you can set on your phone. And we also saw rocket briefly flash. Let's see if that closed on any time frame lower when we inspect higher time frames when we get lower. If we look at the 12-hour, we saw some hidden bearish divergence on the money flow up here. From here you had a high up here with the money flow, and then a higher high on the money flow while you're making a lower low on the 12-hour time frame. That was hidden bearish divergence, and we saw that play out. Okay, so now you're getting oversold on the 12-hour time frame. You're at the bottom of the Keltner channel. What is the Keltner channel? Well, it is this Bollinger Band looking ATR based band that when we get to the outskirts of them, you tend to see a gravitation back up. So for all intents and purposes, this is why I'm saying we could come back into these pools up here to retrace into some of the 100xers up at 25,583 or so. Sorry, is that 25? Yeah, 25,583 or so. All right, and if we look at the 6-hour time frame, also got that cross down with that CPI data FOMC play, so we have to negate that for any type of bullish narrative to stick. We couldn't make this one stick clearly, so this takes a while for these to come beneath the price in a manner that we saw here. So you would not be seeing this potentially until the weekend or the weekly candle close, but you could get the starting points of that in a similar way we did back here, where you have like a starting point come up and then you meander around, make your double bottom, and then you come up. So we still have about this little bit of happiness of essentially three days or so of consolidation, perhaps inbound on these candles on the 6-hour before any type of narrative out of here is had. Okay, so we did see this play out quite nicely on the bearish trend-based fib of this mini one, so we can delete that for now. So let's remove that, and start to think of, actually we'll have that there for a minute. Actually, I have some idea for that later. So if we go to the 4-hour time frame, 4-hour time frame oversold on the Williams and the stochastic RSI. RSI is now beneath the money flow in a significant level that is now turning green, so you're getting oversold on the RSI here. Does that mean you start to see some sort of bounce activated at some stage? 4-hour time frame needs to start seeing the baselines close showing the price action close above the baselines before any type of idea of a retrace back up could be in order. 4-hour time frame is oversold though, so we're going to look at the hourly. The hourly is doing what we were talking about with the scooping up of price here and holding, so the hourly play could still be inbound. We are getting overbought on the hourly time frame, but we could stab up to the cloud as suggested for those pools up above. Now what you would see if you're trying to see if this is genuine or not is you'd want to see if you can hold that 25,333 level or not. If you stab up here and get rejected, as we did in a similar fashion up here with the 7 time frames oversold, or overbought rather, we came up here, we did not close a candle above the super trend, and it was still downside inbound. So if we see a rise up here on the hourly and don't reclaim some of these super trend levels and flip them, then you know the trend is still intact. So this is where you would see something go up to 25,333. Let's see where that puts us. Just at the outskirts of this little pool here. There's some guy at 25,387, $223 million of 100x liquidity, which they could easily grab. Same with the partner in crime at 25,301, 241 million with the partner in crime at 25,306. At $284 million. So basically $500 million right there for the taking, a hop, skip, and a jump away at 25,301. So I am fairly certain they will come up to at least that pool and maybe the 333 and above. Do they reclaim it and hold it to go up higher to these 26.5 region and lock in some more shorts? It all depends on how many of these bubbles get pinged in on which side as we go up. Looks like we're starting to see this hourly play out here with the hourly time frame, and also this started somewhere on the 15-minute. Currently you're seeing the cloud start to thin, and we are reclaiming it in a manner here on the 15-minute. So it all starts on the lower time frames, and you watch that cascade up. Are we going to start to see this cascade to the upside to those pools? I would say it's highly likely based on the drop and the amount of liquidity resting in 100x just above here. So for the time being, in terms of just a scalp idea, you do have some sort of double bottom idea forming to come up to this 387 region and take some of that liquidity out here. If it's genuine, then you would probably come back here and continue, and you'd be looking for this to hold on the cloud of some nature. So if you're already in and you're trying to see how high we go, attempt to be frugal in setting stops into profit. It never hurts to pay yourself for a successful trade. So if we go to the 5-minute, it's going to be a little bit more ambiguous on all this stuff, so we're starting to get more cascading of that on the 15 as well. So we'll come back to that in a minute. Let's just go into NASDAQ and talk about what we predicted yesterday, which was pretty amazing after the live stream. So after the live stream, we were talking about this entry model of the 236 and coming back down into that 236 idea. And basically we did come wick into that zone and bounce off of that 236 up here, and that was a solid 600 points of upside from the 1500 level up there, and then they came back and pinged down into these pools. So it's a furious game. We got the nuke starting to play out as well on the fib levels here at the 786. Where are we going to stand currently? Is this A, B, C to the downside to come back down into these pools? Could be the case. Trying to break the super trend here. Suppression of the 15-minute coming down perhaps, or on the hourly rather. 4-hour also crossing down and suppressing price here. You had a good run for the NASDAQ, but are we starting to retrace on these higher time frames? You do have the nuke of the daily time frame, the weekly, the 3-day, the daily are all not in your favor. Are you going to start seeing a narrative shift of people taking profits on the way down here as we start to reclaim some of these vectors on these larger time frames, and even this gap down here at 14,593. That could be the question on everyone's mind. Is this run starting to fade after the news of yesterday? We take it one step at a time, but there is the cross down event on the 6 hour to contend with now. Previous one was here, and we did see that surge up. When you do have a cross down event, that does mean 6 hour candles could be inbound of this nature. But once again, it goes wick whacking. So if you're scalping like a lot of the Momentum Master crew, then you're in and out anyway. So let's just look at this, and then we'll come back to Bitcoin just like we did yesterday. Once again, 1 5-minute candle of Nasdaq is containing more volume than all of Bitcoin in a single day after New York opened. We'll split the screen and show you how we do it a little bit. Going to those sub time frames. Here we go. $145. All right, so we're going to try to show you an entry model for Nasdaq futures, just as we did yesterday. All right. Well, first I'm going to get out of this and kind of reassess the fib levels and everything. So this fib level pool can be taken out, and we are seeing a drop and a retrace, so we could do a bearish trend-based fib level here just to see if it's holding true. It did come down to the 1618 of that. Could come down to sweep the 2 level, the Hail Mary level of here, come to retest this wick at 1549.75 as a potential idea after coming up to this fair value gap here. We're going to go into the 15-minute really quick. The 706 region, getting a previous cross-up event on the 15-minute time frame to contend with. All right, so let's go into the entry model of the 10-second and throw on the template for Momentum Master. Turn off the fair value gap break imbalance here. So you had the previous cross-up event on the 10-second with bullish divergence, which also had the money flow beneath the RSI here on the 30-second, and you did have a oversold 1 minute as the cloud was in your favor. This is not the place to think about longing, in my opinion, but potentially looking at where it goes from here. Are we going to see a run on the stops up in this region? And the same rules apply for a short. If you start to see fatigue and cross down events on the baselines here, let's see how everyone's doing. Prehab, what's up? Smart Data, yo, what's going on? Dingo and APV, what's up? So it all starts on these lower time frames. You start to see the cross down event with some volume confirmation and the Williams cross down event, and you start to see a retrace, and then does that indecision translate over to here. We turn this over to the Heikin Ashi candles, and then we'll turn this settings over to here. We're getting some indecision on the 30-second, so this could be a B leg to the downside at some point. If you make a large stab C up here, then you could see a fatigue point for a short. Let's make sure this is also set to Heikin Ashi. Okay. So the cloud is quite thick on the 1 minute. If we start to curve here, it is starting to curve ever so slightly. And same here on the 10-second. If we start to see this baseline closing above price, we could see bearish divergence kicking in. We are getting that on the Chaikin money flow as well. Let's quickly go check this out on the hourly time frame really quick and then come back. We got about 10 minutes for the open to start. There is the cloud is tapering very thin, so this looks like it could be a stop hunt before continuing lower in a similar fashion like this. You have like a ABC, and then this could be a larger A. Well, if they're making the D leg, then that could be lower. But yeah, the thinning cloud on the hourly is something to note. We had previous thick clouds starting to turn into a near nothing now on the hourly time frame. So this is the start. You had an impulse and a retrace, and that is as far as you could take it. So based off of that information, similar to Bitcoin, and we came down to the 2, is this going to happen for the NASDAQ as well? If you get that rejection off the 706 region, or see candles come up to here but then close out here, then you could see this easily as a ABC to the downside. Right now, the 15-minute is the thing we are contending with to the upside play here. Let's go into the entry model formula and just take a look as we see it. Okay, so getting indecision on the 30-second, you had previous indecision, just that one 30-second indecision candle. If we were looking at it about a minute and a half ago, you could have taken a few points there, and that could have been an easy scalp of however you want to look at it, $150, $200 or so, and then in and out neutral again. As it stands right now, we're still holding the super trend on the 30-second, the 1 minute, and the 10-second, so it's a risky play to enter. You definitely don't want to think about entering before the open unless you're extremely crazy or experienced with how the open operates, which is why we're doing it for a change here with you guys on the live to show you how the volatility of the NASDAQ operates, in case you didn't know. Getting a cross down event on the 30-second with a potential cross down event on the 1 minute here. Looks like this could, and you're getting indecision, 2 indecisions on the 1 minute. So this could be a downside play. You have a A, B, C upside as this correction wave down. Cloud is starting to taper on the 30-second and the 10-second. 1 minute is also starting to show a little bit of curvature of weakness potential. We'll leave this open and then go to Bitcoin real quick and then come back. Oops. So Bitcoin trying to have this play to the upside to get rejected potentially at the super trend and come back down again. And then what does it do off that cloud on the 15-minute? Still seems to hold true as of this minute. Double top inbound potential for that. Let's look at the liquidity. Thank you, Wendy. Thank you. Anything to help out my fellow partners in crime. So we're getting this pinging up to that region at the 300 that we were talking about. We could easily come up to that. I doubt we would not do that. Sorry, double negatives. I highly suspect we will do that. Come up to that region. All right, so hopefully we see that on the live and we can give you a fatality for that pool of 100x. So we're gonna go to the NQ, back again, and go to the 10 second. Triple adjust this. So we're getting that 30 second. See, this is how the 30 second cascade event, you had the cloud kind of curving in this manner here. Like, check this out. So you have the cloud curving in this manner, which is with the cross down event, and you're getting the thinning of that 10 second, and it's a bearish retest continuation idea. So you have this kind of like bearish retest back down out of that cloud rejection. And then that curvature is also translated here ever so slightly on the 1 minute. The 1 minute is just ever so slight in that it is starting to give the angle impression of losing a little bit of steam here. So so that would have been a decent amount of points, at least a 20-point play right there. And if you're doing micros, you could have had $200. If you're doing minis, which is very, very dangerous, you could have like $1,000 plus, if you know what you're doing. So you're seeing the volume confirmation cross down event. Now you're getting indecision. This could come higher. So this could be an A, B, C to go higher to sweep the highs. So this is why you pay yourself. This is ultimately a scalper's dream. Momentum master and the baselines are your first signs of reversal, and it will ultimately be the scalper's dream. And that's what it's been proven to be thus far. So yeah, that kiss off the cloud giving you the potential to come up here for the open. Once again, I was saying we can basically come up to go down on the hourly time frame here, or if we go up to this 151 level or 156 and get rejected, or even come up into these sweeping these levels at 171 and possibly even coming up to the 236. Who knows where the orders are lied? You'd have to look at the book map, but it is tapering on the cloud on the hourly, which is suggesting you could see a fatigue of an A, B, C to the downside at some point. Where does this B take you is the question. Getting into the minutia of the 15-minute, attempting to reclaim the cloud on the 15, getting an ever so slight curve here, but it could get rejected out at some stage. The angle in which this momentum up shows that it should still go higher. All right, let's start to go back in. We are at 2 minutes until the open for NASDAQ futures and the New York markets. And you'll get to see how basically here we're going to do a connect to paper trade just to show you how it works. And let's do the 10 second, and then we will switch to the triple view again. getting the cross up negation of that level. Starting to see some indecision on the 1 minute with the baselines above the price here. Bearish divergence as well on the RSI and money flow on the 1 minute. And 46 seconds to open. So once again, we're just paper trading this to show you what it does. I don't know if this will actually be the same as doing it. We'll see. I haven't paper traded on TradingView like this before. So ABC coming down, potentially speaking. Suppression of the baselines. And 3, 2, 1. Do we go up to go down? Looks like we're going up. There's going to be there's volume supporting it. You got PVSRA strategy also supporting, but it's meandering around. This could be hooking the longs right now. Boom. And that's how you make like an easy $200-300. And if you compound that daily, that was 350. Like, you could just be done. And you just get this like weird narrative intuition, if you will. And that's not necessarily the pivot just yet. That was just the open. The pivot is up in these regions. So we could be getting a rejection off these fib levels. And then that filled me for like another $200. So it's like these indecisions coming up and coming down. 1 minute indecision, we could go higher still. Mm, 30-second indecision, this is highly risky. You're getting the support on the 10-second here. Cloud is thinning and tapering on the 1 minute. They're pinging the liquidity right now, trying to trap all the orders in. This is where the pivot is pivotal. Pivoting is pivotal. And you can hit the reverse button too. This is a reverse position button. Looks like it's starting to go lower. Volume stepping up. And I'm out. The purple volume here stepping up to the plate showed me that they were possibly hooking the longs. They did not come up out of this range, and you had the cross down event and the tapering cloud here. This could have been your rejection model. If you were frugal in holding at the 706 region, you'd be up a massive amount here. And this is what the bearish trend-based fib levels do for you. You can get those kind of institutional offloading position models potentially speaking. We're getting a bounce off the adaptive maybe on the 30-second and 10-second here. This is an ABC potentially speaking for more downside. And this is how the baselines have you at hello. You have the cross down event back here and talk about stop hunt rising and cloud curvature for coming to the downside. Getting volume here on the 1 minute. Let's go take a look at Bitcoin real quick. We'll come back to this, but this is the idea of the volatility and the volume of NASDAQ. How you gauge entry and exit point. Well, the entry and exit point I was just putting above the highs and lows here, and when we started to break this low, that's when I got out of the long that I was in. But basically I was putting it frugally up above like super trend levels and looking at the cloud and where our wicks were, because in this beginning they're pinging the liquidity or whatever. But the entry is basically this volume support, so you could basically enter on this alone and take profits of this and be frugal in your rise up here, because it could come back for a double bottom here. So you just could take whatever is gives with it holding that cloud and seeing the 30-second too. And the 30-second basically also has this indecision wick here. Oof, that's an ABC to the downside. So this indecision, this is giving like mini level events. If you trade micros, that would be like maybe $15. So this is like mini level paper trading right now. And then when you see the volume support, you could like DCA into it. If your theory is not wrong, it's just your entry was wrong, you could basically dollar cost average potentially into glory thereafter, arising victorious. You do have indecision and the baselines are holding. You get this bull hammer play to the upside here, and just playing like, you know, baseline rejections and stuff and trimming off the fat as you go. If we look at the 1 minute over here, we are holding the super trend here on these 3 minutes. Looks like it's weakening right now. You're getting a possible double top to the downside. The idea is to not stay married to any one side or the other, based off of how volatile and your trailing drawdown would work on these evals. Getting a cross-up event potential on the 30-second. When you get the 10 and the 30 and the 1 minute in your favor, you're starting to reclaim the 1 minute baseline potentially speaking here. So the narrative to a bounce to the upside is not necessarily wrong per se, even though you're in the negative on this paper trade, but it is crossing back down here. It's a bunch of, this is what they would call consolidation idiot boxing. But yeah, the volume support is not coming in here, but it's starting to. This is what you would call the Undertaker play. Getting a lot of yeah, they're probably hooking some liquidity for longs to make a C leg down. Peyton put out if you're in the Momentum Master Discord, if you go to the strategies section, in case you missed it, a few people told me they missed it. They put out some links for how to find some interesting criteria for entry using Momentum Master and a few other things. One is this Y indicator for the volume, and seeing that volume confirmation above the line here with the cross-up events intact. And I'm seeing the selling volume wane, potentially speaking, here on the 30-second. 1 minute is picking up a little bit, but you are getting the baseline coming beneath the price, which is nice to see. So I'll just add another one. And then as you come into momentum, like you can dollar cost average in. And if I was on micros, not minis, you could build a nice position and then just take it out above the high of the range, even scaling out like a 2. Oops, took me out. But knowing what you're seeing, and then we just surged up there, and you could have put it frugally up there, but there's no guarantee that it's going to go that high, or you leave a runner. So if I was running this on NinjaTrader, I would be showing you how you could do that with the ATM strategy and all that stuff. This is a new kind of corner for me, so there's a little bit of speed bumps as we do this, but I might be doing this a little bit more often than not, and then just seeing how it goes. We were pretty damn accurate yesterday, so we're going to see how this goes and try the open together and see how it works. So yeah, this is holding the weighted moving average and the adaptive here. So this choppy consolidation had you at hello for holding this, and holding that, and holding the super trend on the 1 minute, and holding the adaptive on the 10-second. All of this triple confluence together kept me from exiting and remaining in profit. So I'm up like, what is it, like 685 was it? So you could just call it a day and be like, see ya folks. And if you make 685 a day, that's livable income right there. And that's what the whole evaluation thing is about. The whole futures game is about compounding and living a frugal life. And so when you get the cross down event on the baseline here, you could just be out. If you don't want to risk it, you could ride cross up to cross down too. The 30-second suggests you could go higher based on the separation here, but there's no guarantees about that. And yeah, sometimes you do come back to kiss that cloud with a passion too. This is one of those cases where it's going for the highs by the looks of it. Let's go back to the higher time frame and see where that is on the 15-minute really quick. We're coming back out of this range here. And all of that happened within this small little 15-minute candle. So that 15-minute candle of the open, all of that stuff was in the quantum world there, all within the 1 minute and the 10-second. And it's all awaiting the trader who wants to go that deep into it. And it's all fractal in nature, so this suite finds this on all of these assets, no matter the time frame you're in. And you're just getting bull hammer, bull hammer, bull hammer. So until you're getting the indecision on the 30-second, you're basically still good to trade that, stay in that trade. If I was trading this in silence and not having the pressure, this is the ones that I post in the group that I have 40 bangers or 30-point bangers, because you just stay in and you're watching and observing and waiting for this to occur. And now you're seeing the 1 minute cross up event. You're waiting for that indecision on the 30-second to occur, which is not yet happening. And that's about it. Awesome. To see how you do it with Ninja or other trading software. Yeah, I'll think about loading that prior to the stream. The problem is I run it using Parallels because I'm on a Mac. So I have to run a virtual machine of Windows and then run that. And then the last time I left that on, it created that music issue. Oh, and so you're starting to get this indecision on the 30-second here. So this indecision shows that you could possibly switch sides for at least a little burst. And then you could take this down for a little bit. You know, as the indecision begins. And then you're getting indecision on the 1 minute now with 2 wicks on either end. So if we hold this super trend on the 10-second, I'm gonna just close this because it could be another C leg up, because it's kind of bullish right now. But ideally you should see it go down a little bit more than that. I did get a bad entry because I was talking, but and you just scalp it like Peyton just is frugally scalping it. Yeah, they held the super trend. I'm out. Not gonna risk it if it's breaking the highs, and then so you give back some down to 460 from that 665, but don't get married to one narrative. You're also still getting this bullish hammer, and that was indecision, but it was a thick indecision. A spinning top is neutral, could go either way. This one on the 30-second is a spinning top that's thin. If the 1 minute also made that a clear thing and we didn't hold that super trend on the 10-second, then I would have remained in there, but we bounced off it, and so some people would have been taking their longs out of there. So now we're getting back up to the 186 region, some random line on my chart, which happens to coincide with the 236 level entry from yesterday. But yeah, we're still contending with the 15-minute cross up too. So the subtle cross up of the 15-minute is not something you necessarily want to short just yet, because if we go to the 15-minute, this cross up event and these baselines being separated like this and the cloud kind of shifting is showing a kind of bullish narrative to not go against right now. And we just negated the bearish trend-based fib level, so this is gone from the ether. Okay, so what can we do about this now is essentially turn to the 5-minute and see. On the 5-minute we could do a little bullish trend-based fib thing here from an impulse retrace perspective here, and this would have had you at the idea from the open here where to go long and where to consider taking profit. It looks like it's coming to that region at 195 ish. Cloud is still thick too, so you technically never broke the trend. You see how you came up, you kissed this super trend and surged up, and you came back, kissed the super trend, surged up. This is one of those things where people just keep shorting into it and they're getting wrecked. So you don't want to get married to that. And then that could also be where it's a high risk play, but this is where some members within the Discord are taking what they call horse plays, where they horse in and just take that for a massive ride, even though it's not the best location for it. But yeah, you got all these bullish ideas in mind with the cloud. You're getting a cross down event now with the volume supporting it. Indecision on the 30-second. You could fatigue out, or they could just pin the short some more. I wouldn't fight the trend. You could basically take this for a few points maybe. Let's just do it. I just put it by the super trend. It broke the super trend, so I could have held that technically longer. If I had like a 3-pack with the ATM strategy, it would have taken 2 and left a runner, and they would have kicked my runner out there anyway. But you're getting an indecision across down on the 30-second here. The 1 minute also giving you indecision potential. You got 6 seconds for this indecision to lock in on the 1 minute. Volume on the 10-second. Although you are kind of holding the cloud, this seems like it could go up from here, but I'm not going to long it. I'm looking for some sort of other point idea. So I basically got the money they took back to 605 on this paper trade. And I have this like interesting counter here that I methodically push and show you how many trades I got in. I mean, of course you can see all that in the data, but something about the physical nature of it makes it a ritual to me. Yeah, so you're getting this cross-up event, this other ABC extension level up into the pocket. So yeah, that's how futures trading works, and it's really fast, and you got to be fast, and you got to be flexible. In case you ever thought of it as a possibility, those possibilities are out there, not just crypto. When Bitcoin goes nowhere, these things go somewhere. So you could avoid getting stuck going nowhere. So this 706.65 is from a larger, that 236 we saw a bounce off of yesterday. So we're starting to come back into that region of those fib levels. We did see a rejection at the 786 yesterday and come back down into that region. As we start to come back into this little impulse, this 5-minute impulse wave, are we coming back into this region to get rejected, or are we going to come back up to the 11382 level? We are getting overbought on multiple time frames, and you have the 6-hour time frame to contend with a cross down event. So you could get this as a second hit to the high and then possibly come down to chill out. If you look at Bookmap on YouTube, you can see where the pools are. I'm not going to get into it here because it will eat up my bandwidth, but that's about where we'll leave it for today. And let's go back to BTC and see what's happening with that. Come on, BTC. There you go. So we're starting to get the move out of this cross-up event potential on the hourly, coming out of the Keltner channel back up into the vector candle to reclaim some of those liquidity pools we outlined back in the beginning at 387 and higher. So are we going to come back into these regions? It's highly likely, in my humble opinion, not financial advice, of course, just paper trades through and through. But if you get rejected off of this super trend and start to come back down, then you could possibly, if you close candles beneath that and maintain this, then you could come back down into here. And then if you start to find support and see clouds thinning on the 15 and so on and so forth, you could basically take that for a ride, potentially speaking. Yeah, you're getting overbought on the 15 as we speak though, and this double top and the Williams are expressing a certain level of fatigue here. So you could be just fading out here, although you still have about a half hour's time for London to pass the baton to New York, and we'll see something with a little bit more direction to it, let's say. So I would say in the next 30 minutes you're going to see something come up here. Let's stick with you until the hourly candle close, and then we'll bid you adieu. This hourly cloud is also mighty thick, so you expect to have a rejection there, as we have seen in the past. So when you get to the cloud that's thick, you get a hard rejection. So something like this could occur again, like happened on Sunday when we called the double bottom. Or if you have a runner, you could burst right through this thick cloud like we did here. There are no guarantees in trading and no guarantees in life. So it could be one of these guys or one of these guys, but you take it as it comes. And you just position yourself on the baselines at the first sign of reversal, and you trust the indicators that you have seen before you and back tested through and through. And then there's times where it consolidates and doesn't play out, but that's life. It doesn't always work out, but it works out enough times to be accurate, to be a thing. Let's see what everyone's saying. Awesome stuff. So you could do gauge entry would be awesome. Good morning. Hey, what's up, Tracy? So yeah, coming back up to here, and then where does it start to flag out or come back down completely? That's what we're going over now. We just did a little NASDAQ scalp idea showing how to paper trade that. Just took a little $605 out of there like it was nothing, but it was, you know, it'll make you sweat a little bit if you don't know what you're doing, which is why you can also use micros. Hop into the Discord and ask questions. If you have them and not know how to do that, you can switch from minis to micros and it won't nearly be as volatile. $2.50 per tick, so you can be a little bit more frugal with your DCA power and what you experience if with drawdown. All right, so yeah, the 4 hour needs to have this candle start to come beneath it in a manner here for it to be real, in the similar fashion here, like where it starts to cup the price and then you start to come up here. like that's where you start to see genuine moves. In similar fashion, you had these candles beneath the baselines here and closing beneath it. Even the thin boy closing beneath it is better than nothing. And then that's when you could see surges up out of there. Similar to here, you start to see candles closing above the baseline, and then you get the cross-up event, and boom, surge to the upside. So this is how these indicators work in tandem with one another as a leading moving average formula. I'll turn this off for now, a little bit busy for me. All right, so that is the 4-hour support. You also have all the time frames in your favor. Earlier today, we did have a rocket ship appear. I wanted to see if that rocket ship got locked in on any time frame. So let's go back in time here and see if it did lock in on a minute or something like that. Let's just go to the minute time frame. So the way the stochastic entry works, let's just go over that a little bit. Let's just see if we can get it to appear again as we go back in time. Let's see. So, oops, what are we doing here? All right. So where was that rocket ship? I posted it in the group and it was appearing. It came to an alert to my phone. It was right around 10-ish, I think. It was in the Asian session. I was at work. I was teaching a lesson. So it was after the lesson. It was right around there. All right, so it was right around here somewhere, I think. So we got the 6 time frames oversold on the 1 minute. Weird, it didn't lock in. It did show on my phone, I did post it, but it didn't lock in. If you get this push down, the severe push, and then it locks in, the way the stochastic array works is it's a formula that monitors all these time frames, but it's a candle close specific formula. It gives you leading information as you go lower in the time frame, and it needs to close the candle like this, closed intact with that 6 time frames oversold and alerted you to your phone. However, if you go to like a 5 minute, I'm going to just tell you how this works in a little bit more detail. So the 5 minute locked in 5 time frames, not 6, because within that small buyback of a few minutes, that 6 time frames disappeared in that buyback. So this symbol didn't get locked in on this candle close of the 5 minute because it no longer existed. So it's a candle close specific formula, even though it does appear leading in the moment. It does appear in the moment, but you want to see what candles close with that intact. And the higher the time frame with those numbers intact, the more elasticity to that feeling is. So you have a 15 minute now closing with that 5 minute in the 5 time frames oversold intact. And if you go to an hourly, did that close it with it intact? And then you just start to see how much of an impact that close had. And it didn't close there. We got bought back and disappeared it. So the only thing that closed there was 4 time frames oversold. It was like, interesting. And sometimes you see that the daily closes with a rocket ship or something too. And however brief it is, it does appear only slight sometimes, and you don't see it in that moment. Whoops. Whoa. It showed a rocket ship for a split second there. Give me a sec. Hold the horses. Where did that go? Either way, I think it was around this zone. So we're starting to see this candle close in 2 minutes time for the hourly. Hourly is getting overbought. As I said, we should come back into these pools of 100x would be a marvelous thing to see for me. And yeah, that's about it. We're starting to see some volume enter here too. This has been a little bit more extended than usual. I did a whole hour and a half stream for you. Hopefully it was not boring or a waste of your time. 2 hours for the 4-hour candle close. If you can close this above the baseline, we're in the territories of seeing more upside. And you just take it one step at a time as it occurs. Let's see how everyone's doing. Where you look for liquidations for NQ1. Well, what you can do is you go to YouTube. It's not really the same thing, and you just go to this guy, Think with Bookmap, and type in NQ Bookmap, and it will show you where the interest lies. And they have this 109 contracts up at 239. So if I go back to NQ, and so I have that open while I'm doing it in private as well, and you go to the NQ here at 239, coincides with this 786 region, so we could come up into this pocket filling this zone. But they do a lot of spoofing too, so it's not something to hold as a actual thing that will occur, but something that the more contracts are up there becomes this gravitational carrot on a stick that gravitates the price there, and the longer it's there and the thicker it gets, the more likely it wants to get there. And so, as we said before the live, when we were down here, we were talking about possibly coming up to sweep the highs one more time, and we talked about this circle, and we put that circle out there if you replay it, and we were talking about potentially coming up here and looking for a long or a short up in this region perhaps. And it looks like the short is playing out. So if you have your undivided attention, then you can kind of start to get these narratives before they occur, and you get this like indecision with the cross down, and then you just take it. You just pull the trigger and see what happens as these baselines start to get closer together. When they're thick like this on the 1 minute, when they're apart like this, it's just a risky move to go against that. But when they start to come together and cross down, it's an undeniable scalper's dream, these leading baseline formulas. So yeah, that was the hourly candle close push. So also knowing when the hourly candle closes tells you where the narrative wants it to go, per se, and it got a rejection close off of the 200 level, the 204 level, so we could see this continue higher though. Let's just go to BTC and see what we see for that. Didn't really make it so high, just kind of bear flagging it out, going sideways. If you want to see how this regression trend looks, you just go like this, just kind of like a pennant descending channel. So it didn't really have so much interest step up here. We're just kind of like chilling. Let's see what the liquidity that got pinged in has to say for itself. Not much yet. Looks like it's trying to go up to this $36 million region. Could come up to the 25,244. I'd be surprised if it doesn't even take it. Normally with the vector fair value gap theory is that it comes back to at least 50% of this, and so coming back to at least 50% is like a frugal way to think before, even if it does continue lower. Within the Momentum Master Discord, I do have a framework to look at, which is Smart Money Concepts, of course, but basically you look for this liquidity void to get filled in before coming back down to the downside. So that's all I'm thinking about right now. Cloud is thinning, and you reclaimed it even on this slower time frame, so you just take it time frame by time frame, and the cross up event is still holding. We are entering the London Baton Pass in the next 30 minutes. We will not stay on for that. So we already gave you the levels, and that is my story, and I'm sticking to it, folks. So I thank you for coming on into the live and sharing your essence with me in this eternal moment of which we all share an inextricable and inexorable part. Thank you for doing your part, for coming on in each and every day, and we'll do the same, bringing the fire, the accuracy, and all that fun liquidity stuff. And we will catch you on the flip side. Peace.